Good morning. Welcome to Stock Market Today for Friday, January 3rd, 2020. I am Dan Russo, the Chief Market Strategist at Chaikin Analytics. You can find me on Twitter. I'm at DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email where we get a lot of the content for this show, as well as give you daily stock ideas to consider in your inbox every trading day before the market opens. So first Friday of the new decade, let's recap yesterday. U.S. equities finished mostly higher on the first trading day of the new year, but small caps underperformed on the day. At the sector level, industrials and technology outperformed, while defensive groups and materials lagged. Treasuries were stronger, with the curve flattening. The dollar was stronger against the euro, but down on the yen cross. Gold finished up 30 basis points. WTI crude added 20 basis points yesterday. And it's a different picture here this morning, with futures down about 1% following U.S. airstrikes in Baghdad. And that follows weakness in global markets overnight. The airstrikes have led to a risk-off tone in early Friday trading. Treasuries are moving higher, sending yields lower. Gold is up about 1.5%. The Japanese yen, safe haven currency, is stronger against the dollar. WTI crude is up nearly 4%, though it is off the highest levels of the morning. And as we dive in, look at the chart of the S&P 500 here. Bullish start to the year, but markets are risk off this morning, as I said. So what becomes important? Well, what becomes important to me is what's been important to me all along. The key support levels that we've been highlighting: 3150 to 3200, first range of support. And then we have to start thinking about 3000 to 3050 should this really materialize to the downside. Right now, futures have actually stabilized. They are off their worst levels of the morning. Resistance, we were wondering if 3250 was it. Well, we closed at 3257 yesterday, and now we are moving lower. So we're starting to carve out a resistance zone in this 3250 area. The RSI remains overbought. Chaikin money flow is bullish. So we can't really analyze what could potentially happen next in the Middle East. What we can do is monitor our key support levels, monitor the data points within the marketplace, and then adjust, right? If we see, for me, if we see support levels hold while the RSI holds in bullish ranges, well, then to me, there's no reason to really move off of our bullish stance. So that's what I'm watching right now. Focus in on the key support levels. Continue to, today's a great day to maybe identify leading areas of the market and some stocks to add to a bullish watch list, so that when the setup is there, you can start to think about them. Let's turn to our market in a minute. Key points that I'm talking about in my note today to Chaikin Analytics clients. Well, we hit on the first part, bullish start to the year, especially for large caps, but small caps did underperform, and they are now testing relative support. We'll take a look at what that means a little bit later in the show. Tensions in the Middle East are escalating following those airstrikes and lending a risk-off tilt to early Friday trading. We went through it, right? Futures are down. Treasuries are higher, gold is higher, the yen is higher. That's very much risk-off trading. And as I said, futures point to a lower open here today. Let's take a look at the power bars now. Dow had a great day yesterday, up 1.24%, 5-2 bulls to bears. S&P 500 up nearly 1%, 120 bulls to 61 bears there. The NASDAQ, an outperformer, as it has been of late, up 1.65%, 24-10 bulls to bears. There's your small cap underperformance, up only 70 basis points. Power bar ratio still very much bullish, though, 716 to 241. Rally in bonds, sending prices higher by over 1%. Yields come in. Industrials were a big outperformer yesterday, 11-8 bulls to bears, after the industrials added nearly 1.9%, according to the Chaikin Power Bar. Small cap stocks and large cap stocks remain bullish. Across the board, though, major markets are mixed. Let's hit our stock of the day now. TriPoint Group, one of the home builders, has a very bullish Chaikin Power Gauge rating. Closed at 1568 yesterday, up 64 basis points. TPH, the ticker symbol, has a very bullish rating due to very attractive financial metrics, strong earnings performance, and positive expert activity. 20 factors rolled up give us our very bullish rating. Strong trend, strong industry group at this stock trades above a rising long-term trend line. What I see is a consolidation after a strong move higher above a rising trend line. rounding out of an oversold position for a very bullish stock that's continuing to lead the market, although in fairness, the intensity of outperformance has been diminishing of late. The builders have come under some pressure. Chaikin money flow is bullish. Just given the volatility in the market, I would normally argue that TriPoint looks interesting as a bullish idea here, but just given some of the volatility, the geopolitical concerns now coming into the market, if you wanted to wait, I can't fault you. Look, if you just want to follow the process, this looks like a good stock to buy. Manage your risk, set your stop, hopefully ride the wave and raise your stops on the way up. But if the geopolitical issues and some of the increased volatility this morning kept you on the sidelines, I really can't argue with that either. Give the market some time to settle out. I think you'll still have an opportunity in a name like TriPoint. But either way, this does look interesting. If nothing else, this is not a complete waste of time. We want to add TriPoint to a bullish watch list here today. Turning now to our sector tracker. Let's look at the movement of the major sectors in the S&P 500 over the last 5 days. Tech at the top of the list. Tech has been leadership, remains leadership, arguably one of our favorite sectors of the market based on trends, based on power bar ratios, based on our ETF rating, and at the top of the list. Industrials had that big day yesterday to move it into the number 2 slot. Discretionary trading well of late. Remember, we highlighted XRT yesterday. Financials coming on again. Now we're going to watch the financials closely here because I would expect yields to be under pressure today as investors bid up treasuries in a flight to safety. Comm services rounding out the groups that are higher over the last 5 days. Real estate and Utes, there's your defensives down now over the last 5 days. But again, those are two areas we're going to be watching closely over the next few days because, again, risk off, flight to safety, treasuries, yields lower, could lend a bid to the defensive areas and the bond proxies of the market. So start thinking REITs, Utes, staples, and areas of healthcare. Materials and energy under pressure. I actually highlight the materials ETF in my note today because what jumped out at me is that of all the sector ETFs, the materials has the weakest power bar ratio, 0 bullish stocks for 8 bearish stocks. Energy likely going to see a rally today with crude up nearly 4% in pre-market trading. Our industry in focus, biotech services. Now, this is a group that we've warmed to of late. Power bar ratio is slunk back to a neutral condition. 19 bullish or very bullish stocks for 19 bearish or very bearish stocks, but the group has been outperforming the S&P 500 over the past 6 months by 3.77%. It's currently ranked number 17 of 21 subsectors. It's moved down 3 slots. Remember, that rank is based on these ratios. Some of the names that we don't want to look at: Sage Therapeutics, very bearish ratings. Invitae, NVTA, very bearish rating. Not sure I'm saying the name right. And Ultragenyx Pharmaceuticals, RARE, also with a very bearish rating. But let's take a look at XPI, the ETF that tracks this group. It does have a bullish Chaikin Power Gauge ETF rating, and is in a strong trend above the rising long-term trend line. Now, we've had a nice rally. We're pulling back and testing support at the breakout level here at, call it $93.50, $94. Breakout level here as we work towards an oversold condition. We have a bullish fund outperforming the market with bullish money flow, testing support and on the verge of becoming oversold. For those of you who don't want to pick the specific stocks within the ETFs but want broad exposure to biotech, I think we're getting close to this being a compelling idea, right? As if we hold this support level and become oversold, I think that sets up an ideal entry point into the fund itself, XBI. If you're going to drill down to the individual stock level, well, there's 19 names with bullish or very bullish ratings within Chaikin Analytics. Drill down on those names and look for that setup, leading the market, oversold, bullish money flow. It's starting to look interesting to me here again for the biotechs. Let's look at what's trending now. Yesterday's S&P 500 movers and shakers, our gainers and losers. AMD up over 7% after a sell-side firm raised their price target and reiterated their buy rating on AMD. Semis were strong yesterday with AMD leading the charge. GE up nearly 7%. Couldn't see anything company specific to drive trading there. But what did jump out at me is that, there's still groups of people that subscribe to the dogs of the Dow strategy where you own the highest yielding Dow stocks. You buy them on the first trading day of the year and hold them for the duration of the year. That is a strategy that throughout history has been successful for some investors. GE within that bucket of the dogs of the Dow higher yielding stocks. So maybe that caught some flow. WDC, Western Digital, didn't see any real news, up 4.21%. Wabtec, WAB, was named a top pick by a sell-side shop coming into 2020, sent that stock higher by 4.05%. And Xilinx, nothing company-specific to drive that stock higher by nearly 4%, but again, part of the semiconductor group that did have a strong day yesterday. On the loser side of the board, REITs were under pressure yesterday, expect the rally today. KIM down 5.3%. IRM, no real news to send that stock lower by 4.5%. Macerich, another real estate stock, down 3.68%. Kohl's and L Brands, to retailers that were down 3.6% and 3.5% respectively on the day. Again, didn't see anything company specific to drive trading in those two names. Now, let's look at the key themes and relationships that I like to focus on Fridays in my note to Chaikin clients. Well, here's IWM relative to the SPY. Small caps relative to large caps. And small caps got off to a sluggish start for the year, right? Heading lower. Now testing this trend line off of the September lows as it trades below. This is the ratio, small caps to large caps, trading below a declining 200-day moving average. RSI has not been able to exit bearish ranges. So while small caps have started to come on of late, no momentum push behind it. On an absolute basis, the key level that we're watching for IWM is the 160 mark. The consolidation throughout much of 2019 was capped at 160. We finally broke through, retested, and have continued to move higher. 160 key area on an absolute basis. But as we think about kind of structuring portfolios and areas of the market where we focus, holding this uptrend line is going to be key to continuing to focus on small cap names. We started focusing on them as this trend started to move higher, but we'd really love to see this support level hold and momentum get in gear before getting aggressive any further on small caps. Let's continue to watch that group. Let's continue to watch yields, because the backup in yields, especially the 10-year, is really when the small caps started to begin to outperform their larger cap peers. And where are we taking our cue from yields? Well, we're looking across asset classes. All right, we're looking at copper versus gold. This is the ratio of copper, the commodity, to gold, the commodity. And I like to use this ratio to, number one, gauge investors' views on global growth. Notice that copper has been underperforming gold for some time as investors have had fears about global growth slowing down. And then the September timeframe, it started to look like global growth was becoming less bad in conjunction with US and China starting to make progress on the trade deal. At that time, copper began to outperform gold, rallying to about this declining 200-day moving average and this price-based resistance level, where it has now begun to roll over. RSI so far is holding in bullish ranges. And at the same time, notice that the backup in yields, right, here's the 10-year, that backup in yields started with this bottoming in the copper to gold ratio. So if copper to gold starts to fade from here, we would expect yields to start to go lower. What does that mean? Small caps likely start underperforming. Bond proxies might start to catch a bid. However, with RSI holding bullish ranges, we could potentially see a setup here where we begin to work higher and take out this resistance zone. Right now, I think it's a fluid process. I'm watching it closely, but I'm taking my cues on rates from this copper to gold ratio, which then informs my view on different areas of the markets. Why we look across asset classes. Keep an eye on this copper to gold ratio closely here in the next few days. Finally, we've been off the past 2 Wednesdays. We haven't touched on sentiment in a while. It's normally when I do my sentiment work, but sentiment is now a headwind. Here's the 13-day moving average of the CBOE equity options put call ratio, and you can see we've crashed through that level that marks excessive bullishness or exuberance, right? As the market has gone to new highs with the VIX down here around 12 coming into today. I would expect these to reverse. For those of you who look at the CNN Fear and Greed Index, it went out yesterday at 97. A year ago, it was at 12. Christmas Eve 2018, it was at 2. So sentiment no longer a tailwind, a little too frothy here in the near term. That'll wrap us up for today. Have a great weekend, everyone. I'll be back on Monday.